that you cannot give what you don't have. If you don't know how to trade, you cannot make money. It's as simple as that. And you cannot ignore risk management. If you think you are too smart and you don't need it, trust me, those who are smarter have suffered huge losses in the market. The rule is very simple. When you open a trade, I was talking about position size. When you want to open a transaction in currency trading, you don't pick any lot you want. You calculate to get the right lot to trade a position. For instance, if I have $1,000 in my account and I want to risk $50, okay, the first thing you do is to determine the maximum risk you want to take. What is the maximum amount of money you want to risk for that particular transaction? If it is $50, then you need to determine your entry and your stop loss. Hello?
Hi.
Okay, good. So you need to determine your risk. The first thing you do is, do you want to risk $50? If your answer is yes, then you need to put it down, $50. Now, you need to determine your entry and your stop loss. Are you with me? Yeah. Determine your entry and your stop loss. When you do that, the next thing for you to do is to divide your $50 by the number of pips from your entry to your stop loss. Okay, let me give you the formula. The formula is risk amount divided by risk pips. For instance, let's say from my entry to my stop loss, I have 100 pips. Let's do a simple arithmetic. Let's say from my entry to my stop loss, I'm going to use 100 pips, and I want to risk $50. That would be $50 divided by 100 pips.
Okay.
$50 divided by 100 pips. That will give us 0.5. Right?
Yes.
Now, what is the cost per pip for the currency pair? When we're talking in terms of standard lot, let's look at Euro USD for instance. Euro USD is $10 per pip for one standard lot.
Okay.
Do we agree?
Yes.
Okay. Now, what we do is you need to divide 0.5 by 10. That will give us 0.05. Yes. That is the lot size to trade the position. The formula is risk amount divided by risk pip divided by whatever answer you get from that. Risk amount divided by risk pip, you get your answer. When you get your answer, divide it by cost per pip per standard lot. Cost per pip per standard lot. What we have done now is $50 divided by 100 pip divided by $10, and we got 0.05. If we open a position at 0.05 on Euro USD with 100 pips as our stop loss, we are not going to lose more than $50, no matter what is going on in the market. That is position size. You calculate to arrive at the lot to trade with. You don't pick a lot to trade with. You don't just look at your balance and say, I'm going to trade with 0.1. That is not the right approach to currency trading. You do that, you're going to lose money. You're going to lose more than you are willing to lose. So it is important that we understand risk management. Mr. Aban?
Yes, sir.
I believe you can emphasize more on this area.
Yes, sir.
In terms of position size, risk management, margin level, margin call, and stop out levels. It's important for traders to know all of these.
Okay.
Now,
Yes.
I don't want to. I've emphasized on three things. You need to understand technical analysis and fundamental analysis, and you need to combine the two.
Yes.
Okay. You need to have your risk management in place. You need to understand it. Then again, you need to go for something that is realistic enough for you to make. For instance, a new trader who is just coming into the market with about 2 months experience, who is trying to make 50%, is going to lose money at the end of the day. You do not have the skill or the experience to make such kind of return in the market. But you can do it. But when you do it, you will be able to do it based on your luck. And you can only ride your luck. Why? Over time, you will burn out because you do not have the skill or the experience to duplicate your success. So I think with this, I can take some questions.
Yes. Questions. Questions.
You can ask any question you have. I'm also a trader. I'm not just a marketer.
Okay, what's the implication if your margin level drops below 100%?
Good. Now, when you are opening an account with a broker, all the brokers all over the world has stop out levels and margin call. Now, why do we have margin call? We have margin call because you've been given leverage. The money you are trading with is not entirely your money. For instance, when you open one lot position, we all know that one lot is 100,000 of whatever instrument you are trading. One lot stands for 100,000. Do you have $100,000 in your account? No, you don't. So somebody is actually giving you money to trade, and that person is the broker. Now the broker is not going to lose its own money because the broker understands the risk in the market. You'll be given leverage to make more money, not to lose your money. The reason why you have to stop out level is because when your margin level drops to 50%, there will be margin call. Let me explain margin call in layman's language. In the stock market, I want you to listen to this very well. In the stock market, you can tell your broker that you want to buy First Bank shares worth 1,000 naira. But you don't have 1,000 naira. You only have 500 naira. Now the stock broker is now telling you, look, I'll give you additional 500 naira. When you add that 500 to your 500, you don't have the 1,000. Then the shares can be bought for you. But the issue is this: the broker has given you 1 to 2 leverage. You understand it now?
Yes.
You contributed 500. The stockbroker contributed 500. So your investment in the 1,000 shares of First Bank is 500. That of the broker, 500. Although whatever profit you make on it is yours 100%. Now the broker is not going to lose because it's not going to share profit with you. So it's not going to share any loss with you. The broker will put a clause that if the value of the First Bank share should drop to 600 naira, it means that 400 of your money is gone. The broker's money is 500, and your money will be 100. Are you with me now?
Yes.
From 1,000 naira worth of shares, the value has dropped, and we now have. If we are selling the shares today, we will only be able to get 600 naira. Now the broker will call you and tell you that, look, Mr. Urban, your investment is now 100 naira. Our investment is 500 naira. We need you to bring more money in, or we are going to sell the shares, return your 100 naira, and keep our 500. That's what we call margin call. The broker will call you to tell you to bring more money. But in currency trading, nobody will call you. It's your job to know that if your margin drops to, if your margin level drops to 50%, you should add more money to your account, or you should close some positions. Are you following?
Yes.
When your margin level drops to 50%, it is your job to close some position or to add more money to your account, because nobody will call you. In currency trading, you don't get the call from the broker. What you will get at the end of the day will be stop out level. Now, when the margin level drops to 50%, you have the opportunity of adding money or creating positions to raise your margin level. A margin level of 50% is telling us that your equity is now 50% of your margin. Are you following?
Yes.
When your margin level is 50%, it means that your equity is only 50% of your equity, 50% of your margin. So you need to do something. If you fail to do something, either to add money or close some positions, and you allow your margin level to drop further to 20%, then your positions will start closing. Your positions will start closing, starting from the biggest negative position. That is where you have stop out level. Stop out level is 20%, margin level, margin call is 50%. With some brokers, your margin call will be 100% and your stop out level will be 50%. But with HotForex, all of these are very low, so that you will be able to trade well with your money. The margin call is 50%, the stop out level is 20%. As a trader, you should not allow your margin level to drop to 50%. Do we get that?
Yes.
Now, we have seen situations where traders will go on different forums and be talking about brokers that I still have more money, I still have money in my account, and brokers just close my positions. It will happen if your margin level drops to 50, then to 20, because it is automatic. Nobody is going to go there to close your positions. These are already programmed into the way the industry works. If you allow your margin level to drop to 20%, your biggest loss will close first, followed by the next biggest one. So you need to make sure that you protect your capital. Okay, you have to make sure that you don't overtrade. Your margin level will drop abnormally when you overtrade. You have $1,000 in your account and you are opening in position of one lot. That is too big for $1,000. Okay. So with HotForex, our margin call is 50% and our stop out level is 20%. So you get a margin call if you allow your margin level to drop to 50, and the stop out if you allow it to drop to 20%. Have I answered your question, sir?
Yes.
Okay.
Any other question?
Any other question?
Please, any other question?
No question.
No question. Okay, sir.
All right. So I will encourage all of us to, you can find time to go on our website. We have videos that you can study on the website. If you go into your wallet area and you go to HotForex Education, we have enough videos on analysis, we have videos on technical analysis, we have videos on strategies, we have videos on risk management. Please put in effort to upgrade yourself, to develop yourself so that you can become successful in currency. Currency trading is not a joke. You have to know it. You have to learn it. think if we're able to do this, all of us will benefit of this market. So, if you don't have any other questions, I would like to hand over to Mr. Abans to continue with the session.
Okay, sir. So I have no chat to share with us.
Okay. You want me to share? Okay. Let me look at my charts and see what I can bring up. Okay. We have. Okay. Let me look at unions that are credible right now. Okay. I have some that I can share with you. Okay.
You can share your chat. Yeah, share your screen.
Okay. I'm sharing. Let me go to
share screen.
Yes, screen.
Yeah.
Can you see my screen now?
Yes.
Can you see this screen?
Yes.
Okay, good. We're looking at Euro USD right now, and I'm looking at the weekly time frame. You can also look at USD card on the daily time frame. Okay, this is USD card on the daily time frame. I try to do my analysis from the weekly time frame. Okay, because I'm a long-term trader, and I want to see, mostly I trade support and resistance levels. Okay, I combine support and resistance levels with fundamental analysis. For instance, if you look at this on Euro, this is Euro USD. I'm going to mark this area for us. What I'm trying to do is to connect the major levels. Okay, I'm going to mark this place. From what we can see here, Euro USD is coming back from the major resistance level. Can we see it?
Yes.
Okay, if you look at this from the weekly time frame, we have a sort of range. For those of us who trade the pin bars, we can see the candle formation that was created at this level. We can look at the period. Let's look at from this line here to this particular point. We can look at the whole of last year. Can we see it?
Yes.
Can we see if you can see my cursor?
Yes.
Now this year move again to that level, the highest level of last year. We got to that level and we can see a pin bar on the weekly time frame that formed. Okay, this coupled with everything that is going on within the European economy, we can see that the euro is finding it difficult to go above this level. And right now, what we are seeing is another move to the downside. Okay, so if you want to trade this on if you now go to the lower time frame, going to the lower time frame, what we are going to be looking at is let's look at it on 1 hour now. If you look at it on 1 hour, usually what I'm going to be looking at is for price to go below this level. I'm going to be looking for price to go below this level. This is the level we established last week, if I'm not mistaken. Okay, this is the low of last week. I'm going to be looking for price to drop below this level because what I want to do is I want to sell from the weekly time, from the daily time frame. I want to look for opportunity to sell. But I'm not going to do that unless I see price going below the low of last week. We can see LOPS2, LOPS1, all of this is similar. We're talking about, let me do something. I want to show you something. I'm going to be looking at this box. I'm going to be looking at this box. I want to see price move below the low of last week. If we can get price move below the low last week, I'm going to consider selling this currency pair. Mostly, I trade from the higher time frame. I'm a long-time trader. I'm not a scalper. So I trade from higher time frame, analyzing the market with fundamental. One of the things that I can share with you from my email. Let me show you. Let me see DK asset. Let me show you this. Okay, we can get some facts on Euro USD. I will send this to Mr. Aban for you to read what we have here. Okay. What we have here is UI. Can you see this?
We are seeing.
Can you see this? But I want you to read this if you can see this.
Okay, the projector went off. It's booting now. I think it's on now.
Okay.
We had a change in power.
Okay. Let me see if I can capture this.
Okay. It's small. It's tiny.
Okay. I will read it. Let me make it bigger.
Okay.
Let me see if I can make it. Pictures. Is it better?
I still to stand by the projector. Yeah, it's better that way. Better. Can increase more.
Are you reading?
Meanwhile, Euro could finally be buckling under the weight of the region's troubles. The currency traded as low as 1.002 versus the US dollar on NFPs, then reversed to hit a high of 1.1120. Eventually, we expect 1.10 to give. Not only was the latest round of Eurozone data weaker than expected, with Germany reporting a smaller trade surplus and France reporting a drop in industrial production. But the region's problems continue to grow. We have talked at length about Italy's banking sector struggles, and this, along with Brexit, prompted the IMF to lower its forecast for Eurozone GDP growth. They now expect the economy to grow by 1.4% in 2016 instead of 1.6%, with even slower growth if risk aversion intensifies. There are no major Eurozone economic reports scheduled for release in the coming week, leaving the focus on the Eurozone area finance ministers meeting in Brussels, Italian bank stocks and appetites.
Okay. Now, with all of this that we've read, with the troubles in Europe, do you think the order flow will be positive for the euro? Do you think the order flow? Initially, I mentioned the order flow. I said the job of a trader is to predict future order flow and take a position. Okay? Do you think with the troubles in euro, do you think there will be more demand for the euro or more supply?
No.
Do you think investors will be holding on to euro or they will be dropping it?
Drop it.
They will be dropping it.
Yes.
If investors will be dropping euro because of the crisis in that place, if investors will be moving out, if the capital flight will be out of the European Union, then we should be selling euro. In the coming days, we expect euro to weaken. This is not about just the candle or anything. It is about the reality. We need to understand the major market movers. These are big-time investors. What would they be doing? We want to take advantage of that. It is what they are doing that actually move the market, not what you think. because we are smaller traders and our volume cannot really move price. It is what the big time investors will be doing. So what will be the future order flow? What is it? What do we think investors will be doing? Would they be buying more euro? Would they be demanding for more euro? Would they be buying more European assets? Or they will be exiting European assets? If they are getting out of euro by dropping their assets like stock, bonds, treasury bills, and all of that, there will be more supply of euro. Who will be selling euro? So we want to be looking for opportunity to sell euro. That's what we're going to be looking for. Our job is to now be patient and look for opportunity when we can start selling euro and make money. We don't just jump into the market because the market is open. Because the market opens for 24 hours does not mean that you must go into the market at any point in time and open a buy or sell trade. No, we wait for the right opportunity. We know what we want to do, but our entry is also very important. Our job is to begin to look for opportunity to make money from this. Now, let's look at the USD card. We are looking at the USD card as it is right now. This is what we are seeing. Let me zoom it. If I'm going to mark from the higher time frame, I want to mark this level. Okay, price has gone to this level, and again I'm going to mark this level. Okay, this is a turning point that we've seen. I'm not marking this because there's a level here. Okay.
Okay.
Now, this is what we are seeing from the daily time frame. From the 4-hour time frame, we can look at this. Right now, if you want to trade this currency pair, what should be your consideration? As it is now, this is daily time frame. We want to trade it. What should be our consideration with what we are seeing? There's a level here that price is turning back from. Don't forget that. Let me zoom it again. We can mark this. We can mark this level. I can make adjustment if I want. I can mark this level, this place, okay, and this place, and I can mark this place. It holds. We are seeing a resistance level within this area. Let me bring it back. Okay. We are marking this level. We are marking this level here, and I can put a box to say that this is a resistance area. Okay. With what we are seeing from the weekly time frame, price is turning back from that point. The only thing that will make us want to buy USD cards around this area is if we can see a close of a candle above these. Don't forget one thing. It is our job to be looking for high probability trades that we believe will go our way. Now, if we are going to buy this currency pair, you want to wait to see the price move above this region before you want to start buying. As it is now, we are going to look at the reversal. We are going to consider the reversal around this territory. Fundamentally, what are we seeing in the market? Let me bring it up. Let's look for USD cards. Okay. I'm going to bring this. Okay. Canada could not have reported more different employment numbers. Okay. 700 jobs were lost in June, and yet the unemployment rate dropped to its lowest level in nearly a year. The improvement in the jobless rate was largely driven by lower participation rate, as full-time workers dropped 40,000, and part-time hires increased by 39,000. This marked the worst quarter of Canada's job market in 2 years. USD card hit a 1 week on the news, as this, along with the wider trade deficit, drop in building permit and slower CPI growth, gives the Bank of Canada strong reasons to talk about easing monetary policy at their meeting next week. When we talk about a central bank, okay, increasing the easing, what is easing means in an economy? Do we know what it means?
No.
We don't know?
Yes.
Okay. When you ease your economy, you do, the traditional thing you do is to cut interest rates. When you want to stimulate your economy, okay, you want to stimulate your economy and make credit cheaper, you cut interest rates. Apart from cutting interest rates, you also introduce what we know as quantitative easing. Now, you only introduce quantitative easing when you cut interest rates and it is not working. But in the case of Canada, Canada will be looking at cutting interest rates. And when a central bank is thinking of cutting interest rates, you should be selling the currency of that country. Are you following?
Yes.
If I'm going to cut my interest rate, you should be selling my currency. Now, with all of this, let's look at this. From what we have seen so far, let's look at the 4-hour time frame. Last week, we saw a movement to the upside last week. Okay, yesterday, are you following?
Yes, yes.
Yesterday, we saw an upward movement as well. But today, we see a sharp movement to the downside. What is responsible for this? Now, somebody tell me what's responsible.
Anybody?
Nobody. Now, with what we are seeing on the charts,
I wish your mouth.
hello.
Ah.
I want to see if we have a trend line here. Okay. Right now, as it is, the best thing for you to do on USD card, if you want to trade this currency pair, is to wait. This is what I will do. If I'm going to trade this currency pair, what I'm going to do is to wait and see if, hello, it will be better for us to take out this level on the daily time frame. It will be better for us to take out this level and we'll consider buying USD. Are you following, sir?
Yes.
For me, I'm not going to do anything on this currency pair right now as it is. What I'm going to be looking for, if you look at this candle formation, this green and this red, I want to see what will happen by tomorrow, by 10 p.m. Nigerian time. By 10 p.m. Nigerian time, this red candle will close. This is a candle formation. If you are going to sell this currency pair, you can sell it on a short term. Are you with me?
Yes.
You can sell it on a short term. For instance, if you go to 15 minutes time frame, you can short this currency pair on a short term. You have to close your position within a day. The likely thing that will happen on this currency pair is for price to turn back up and break this level. We could see a movement above this level, and if you see price move above this level, we're going to start buying USD card. That is the long-term trade on this account. If we're going to trade anything above this level, if price should go above this level, we want to see a candle close above this level. If the candle close above this level, we want to be buying USD card. That would be a reliable position. Because I tell you, if the central bank is looking at introducing QE, then it means that the dollar will gain against the Canadian dollar. Are you following, sir?
Yes.
So if you want to trade this currency pair now and you don't want to lose your money, you need to be patient. You need to be patient to see a clear direction in the market. For high-risk traders, you might want to sell this. But I tell you, you only do a short-term trade on this position because we are saying that by next week meeting, we are looking at a reduction in the interest rate of Canada. Okay, we are looking at a discussion that will go around reducing interest rates. If that is going to happen, then Canadian dollar will fall and the USD will gain against it. So if you are selling this currency pair, let it be a short-term selling. Do we understand?
Yes.
My kind of trading, you don't want to. I don't do crazy technical analysis. If you want me to do technical analysis for you, I will tell you that if you try to break this trend line, you should start selling. You can do that. But I tell you, we want to look at what is the order flow, what is the future order flow, and how can we benefit from the future order flow. The likely order flow we're going to see is for the dollar, the American dollar, to gain against the Canadian dollar. Any question on this?
Please, any question? I hope there's no questions, sir. You've done much.
Okay. Okay. I thank all of you for your time, and we hope that we're going to see you on the platform doing great things going forward.
Okay, sir. Thank you, sir.
All right. Bye-bye.
Thank you for your time.
Thank you, sir.
Please, let's encourage you. The hall was not seen well. Oh, we can see all of us now, sir.
Yes, I can see everybody.
Okay. Okay, thank you, sir.
All right.
We are hoping, we are looking forward to have you here live next week.
Next week, sure. You are talking about 23rd?
I'm talking about our meeting in Port Harcourt by Saturday. Then by next week, you join the live station on Tuesday here in Uyo, and we proceed to other states.
Okay. Sorry, I will be available on Saturday. I will be in Port Harcourt on Saturday. I'm going to be meeting with you and others on Saturday.
Yes.
And the following Saturday, I will also be coming down. Okay. And hopefully before that Saturday, we can have some live appearance on radio station.
Thank you, sir.
All right.
Bye-bye. Bye. Oh, yes. The whole essence of our gathering was to have a live trade analysis, and also we can end this meeting from here. End meeting, stop recording.